Hey guys, what's up? Welcome back to another video. In this video, I'm going to be talking about a stock that I recently found in the market that could be presenting a good buying opportunity at the moment. And that stock is Genpact. And we can see this stock is outperforming the market over the last year. They're down around 12% in the same time period that the S&P 500 is down around 18%. So they are doing a little bit better over the 1-year chart. Over the 5-year chart, the S&P 500 is up around 40%. And Genpact is up around around 38%. So they are pretty much performing right on par with the rest of the market over the 5-year chart. And so in this video, I'm just going to look into some of the recent news that's come out surrounding this company, look into their financial statement, and then lastly, figure out the intrinsic value per share for their company to know if this is a good buying price to buy into the company from a value investing perspective. And so right here, we can see this article that I found on Yahoo Finance talking about a few reasons why they believe that Genpact could present a good buying opportunity. In particular, they talk about how over the last 6 months, they've had an impressive run, returning around 11.7% to their shareholders compared to the S&P 500's fall of around 7.4%. And so they think that this recent run-up in the stock price could potentially carry over into the near term for people who add the stock to their portfolio at the moment. And also right here, they talk about some strong growth prospects and some growth drivers. In particular, they talk about how the expanding customer base, the cost control, the strategic mergers and acquisitions, and the aggressive share buybacks that the company is undergoing right now could end up producing really positive growth for the company in the long term. And so those are just some reasons why they believe that this company might present a good buying opportunity at the moment. So right here, we can see their balance sheet comparing their results for December 31st of 2021 to September 30th of 2022. And during that time period, total assets are down from $4.9 billion to $4.5 billion. Total liabilities are down from $3 billion to around $2.8 billion. And then total equities down from about a little under $1.9 billion to around $1.7 billion. But the retained earnings line item is actually up from $732 million to $745 million. So that is indicative of positive operating profits that are being accumulated onto their balance sheet. And so right here, we can see their income statement. Their net revenue has increased from around $1.01 billion to around $1.1 billion. So that's around a 9% increase year over year. And then we can also see that net income is down from around $102 million to around $95 million. So that's a decrease of around 6% year over year. In the same time period, that total revenues are up around 9%. So obviously, the cost of operating their business as well as the cost of revenues probably contributed to this decrease in net income during the same time period that there was an increase in revenues, unfortunately. And so next we can go to page 10 to see their cash flow statement. And we can see that they're comparing the first 9 months of 2021 to 2022. During that time period, operating cash flow decreased from around $447 million to around $214 million. And then we can also see in their financing activities that they've been returning a little bit of value to shareholders in the way of dividends and share buybacks. They've repurchased around $147 million worth of common stock in 2021 compared to $182 million worth of common stock in 2022. And they also paid out around almost $70 million worth of dividends compared to only $60 million in 2021. So just like the article we read pointed out, they are aggressively returning value back to shareholders at the moment, which is definitely a value proposition for investors who are thinking about investing into Genpact. And so right here we can see this is a discounted cash flow model trying to figure out the intrinsic value per share for their company. Yahoo Finance thinks that this company is going to grow at around 11% for the next 5 years. They had around $640 million worth of free cash flow in 2021, around $1.2 billion worth of debt on their balance sheet after subtracting their cash. And they also have around 183 million shares outstanding. And so that puts their intrinsic value per share at around $50 per share, which means at the current share price of around $45 per share, they are trading below intrinsic value per share if they are able to grow their cash flows at around 5 to 11% over the next decade. And so on the right-hand side here, I did a competitor analysis comparing them to some of their competitors, Accenture, IBM, and Xerox. All of these companies provide global professional services in the B2B play, just like Genpact. And so we can see that in comparison, Genpact has the second highest gross profit margin after IBM. They have the second highest net profit margin after Accenture, and then they have the second highest return on assets after Accenture as well. They also have the lowest PE ratio relative to the four companies. Obviously, Xerox is an unprofitable company, so they don't have net profit margin, return on assets, or PE ratio necessarily. Then we can also see in terms of dividends per share, Genpact unfortunately pays the lowest dividend at around 43 cents per share, and IBM pays the highest at around $6.55 per share. But they are also currently trading at a pretty high PE ratio of over 100 times earnings, so that does put them at a bit of an overvaluation from that perspective. But overall, from a competitor analysis perspective, it looks like Genpact is pretty competitive. They come in around a middling of the pack score in terms of efficiency ratios, but then they also have the lowest PE ratio, so that is pretty attractive relative to their competitors. And then obviously from an intrinsic value standpoint, they are currently trading below their 50% margin, or below their intrinsic value of $50 per share. So not really sure what to think of Genpact at the moment, but I'd love to know what everyone watching this video thinks about Genpact. Is it a good buying opportunity at the current share price? Let me know in the comment section down below. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.